you are a director of an Irish company, filing your annual return isn't optional. Miss it and there are potentially serious consequences. In the next few minutes, I'll walk you through what annual returns are, when they're due, what you need to file, and how to avoid penalties. So, let's jump in. So, what is an annual return? Annual returns are mandatory statutory filings that every Irish limited company must file with the company's registration office, CRO, regardless of trading activity, profitability, or business status. The returns provide the state with essential information about your company's status, including director details, registered office address, share capital information, and financial statements where required. This information is about company structure and compliance, not tax. Fail to file and you risk penalties, loss of audit exemption, or even your company being struck off. Your annual return date is one of the most important dates in your company's entire calendar. For newly incorporated companies, the first annual return is due 6 months after incorporation. It doesn't require you to submit financial statements as most companies have not completed their first accounting period in this time. Your second annual return must be filed a year after your initial annual return or 18 months after incorporation and every year thereafter. This date is known as your company's annual return date, ARD. Financial statements must be submitted along with annual returns from this point on. Once your ARD arrives, you have 56 days to file. This submission is non-negotiable and applies to all components, including financial statements, signature pages, and payment processing. We recommend you start preparing financial statements well before your ARD. That's what usually causes delays. Missing this deadline will lead to automatic penalties and may cause eligible companies to lose their audit exemption. To simplify this process, it is advisable to either mark your calendar well in advance or delegate this responsibility to a professional annual return filing service like that offered by Company Bureau's company secretarial experts. This way, you can ensure the deadlines are monitored throughout the year and that your returns are submitted on time. Successful annual returns filings require careful preparation of several key documents and pieces of information. Annual returns are submitted to the CRO and need to include the following: company details including registered name, registration number, and registered office address, director and secretary information such as their full names, addresses, date of births, and appointment dates. Any changes made during the year must also be accurately reflected in your return. Shareholders and share capital details must also be provided, which require precise reporting of issued shares, share classes, and shareholder details. And financial year-end statements must be properly prepared, audited where required, and formatted as a single PDF document not exceeding 8 megabytes. The financial statements must be uploaded before generating signature pages, as the core system requires a sequence for processing. Most issues are small admin errors, but they can cause delays and penalties. Now let's talk consequences. If you miss your annual return deadline, there could be serious repercussions, with the most immediate being financial penalties. Late submissions costs can add up quickly and significantly impact your businesses. Penalties for late filing starts at €100, with an addition of €3 for each day beyond the deadline, capping at €1,200 per return. So if you're 10 days late, that's already €130 out of your pocket. These penalties are non-tax deductible business expenses, resulting in a direct financial loss. You can calculate your annual return filing penalty fees using our online calculator, which will be linked in the description below. Besides monetary fines, late filing can damage your company's reputation by raising red flags with potential investors or business partners. In severe cases, ongoing non-compliance may result in your company being removed from the register. This dissolution process transfers all company assets to the state and can be very costly and time-consuming to reverse. If you've missed your deadline, don't panic, you still have options. Before your deadline, you can apply to the CRO for an extension, but it's not always guaranteed. If you've already missed it, you may need to apply through the district court. This is time-consuming and can add legal costs. So, how can you prevent this in a smart way? Systemize it internally by tracking your ARDs, preparing accounts early, and reviewing company records annually. Or you can outsource it. Many companies use an expert company secretarial provider like Company Bureau to track their deadlines, prepare and file returns, keep records updated, and protect their audit exemption. It removes risks and saves mental bandwidth. Above all, keep these essentials in mind. Know your ARD, file within the 56-day window, prepare financial statements early, and don't ignore your deadlines. Annual returns aren't complicated, but they are unforgiving. Handle them properly and you stay compliant. Ignore them and it gets expensive fast. If you need professional help, your company's secretarial experts are ready to assist with your annual returns. Visit us at www.companyformations.ie to get started. Thank you so much for watching. If you enjoyed this video, please give us a like and subscribe to see more content like this from us in the future. See you soon and bye for now.